Okay, so um inisip ko kanina kung isasama ko pa ba yung integration of accounting concepts. So naisip ko since lahat naman tayo is may basic knowledge of accounting, hindi ko na siya sinama dito sa review. Tumalon na ako agad dito sa analysis of past and present performance. So some of the students here were my students, no? For financial analysis and reporting, and some of them are from my monetary policy and central banking classes. So initially, nag-cancel kami ng midterm for MPCB. So I asked Kim, no, ikaw yung inask ko para mag-ano na lang, mag-proceed na lang with financial analysis and reporting instead. So we will be doing first, no, the review on the analysis of past and present performance. So I believe that everyone nabasa niyo naman na to, no? But since this is a review, we will be reviewing we will be going back to this topic again, no? So let's start with the vertical analysis. So vertical analysis, or most commonly referred to as the common size analysis, no? It is a method of analyzing financial statements that list each line item as a percentage of a base figure within the statement. So for in this example, this is an example of an income statement. No? So your base item, no, in the income statement will be your sales. Okay, as you can see here, so the base figure will be your 100%. Okay? The first line of the statement always shows the base figure at 100% with each following line item representing a percentage of the whole. So sabi dito that cost of goods sold is 69.6% of which, no? So para ma-compute natin yung 69.6%, the total cost of goods sold for 2018, which is 1,043,000. So 1043 divided by your 1498 times 100. That's how we obtain our percentage, no, of cost of goods sold. So performing a vertical analysis on the financial statement that does not already show each line item as a percentage. So the percentage formula, kaya nang sinabi ko, line item. So for example here, your cost of goods sold divided by your base item, which is your total sales, times 100 to get your percentage. So bakit natin ginagawa ulit, no, yung vertical analysis? Tinanong ko na to sa mga sections na hawak ko. Bakit natin ulit ginagawa si vertical analysis? So on the perspective of a financial analyst, no, ginagawa namin yung vertical analysis to see an in-depth changes. No, for example here, kung makikita nyo dito, on the year 2017, no, yung net income ng company is at 76,500. No? The net income of the company on the current year, which is your 2018, is 91,000. So from this, makikita natin, no, na masasabi natin na yung net income ng company tumaas. No? But by conducting vertical analysis, mas makikita natin kung maganda ba yung pagtaas ng net income ni company. So as you can see here, the percentage of net income of the company way back 2017 is 6.4%, no? But in 2018, it's 6.1. So it doesn't always mean, no, that if you have a much greater net income on your current year versus your previous year, that doesn't always mean that the company is doing is generating higher net income. So that's why vertical analysis is of vital importance, no, para mas makita natin kung yung company ba ay nagpe-perform ng mas maayos. Okay? Next, we have your horizontal analysis, no? So horizontal analysis, no, this is a comparison of financial ratio, a benchmark, or a line item over several accounting periods. So this is also known as your trend analysis. So this can be performed on any item on the income statement, balance sheet, and statement of cash flow. So si horizontal analysis naman, no, si vertical analysis kasi pataas natin, vertically natin kinukuha. So si horizontal analysis naman is comparing to comparing the line item for the past years, now for example 2 years, horizontally. For example here in 2019, no, so in 2019 your cash and short-term investment is 74,442, and in 2018 it's 75,574. So in horizontal analysis you will be doing you will be checking for the increase or the decrease in the amount or in the percentage, no? Here from 2018 to 2019 there is a decrease in the cash and short-term investment of $1,132. Nakakasunod? Paano natin nakuha 'yon? We just deducted 75,574 from 74,442. Tama? Nakakasunod? Okay. Now, paano natin kinompute si percentage? Ano ulit ang formula natin para makompute natin si percentage? No? So, para makompute si percentage, kailangan nating i-deduct si 75,574 sa 74,442 and divide it by your previous year. So, bale, ang mangyayari dyan, current year minus previous year over your previous year. Tama? Para makuha natin yung change, yung percentage of change. No? Nakasunod? So, try natin kung tama ba tayo. No? So, 74,442 minus 75,574 divided by 75,574. So, that's times nyo ng 100. So, that's 1.49497, no, which is 1.50. Tama? So that's how we conduct horizontal analysis on the balance sheet. O, papakita ko sa inyo yung may papakita pa ako sa inyo. Pero tapusin muna natin. May papakita ko sa inyo yung isa pang klaseng vertical analysis and horizontal analysis. Okay, so vertical analysis versus horizontal analysis. So the primary difference between vertical analysis and horizontal analysis is that horizontal analysis uses percentages to represent each line item's percent change quarter over quarter or year over year. No? So while the formula for vertical analysis looks like the percentage of an item to the whole, the formula for a horizontal analysis looks at the item's percent change from one period to another. Yun yung sinasabi natin kanina. No? Ito yung formula nilang dalawa. So, dito, comparison year amount minus base year amount over your base year amount. No? So, para mas madali nyo matandaan, current year amount minus previous year amount over previous year amount. Okay? So, your vertical analysis formula would be statement line item. So, yung line item mo minus yung base figure mo times 100 to get your percentage. No? Nakakasunod? So it is, however, it is important to remember, no, that you can still use vertical analysis to compare a line item's percentages from one quarter or year to another. The main difference is that the percentages in the vertical analysis do not represent the percentage of change. Kasi ang nire-represent dun sa vertical analysis is percentage of the base base figure. Okay? So ito yung example, no, isa pang example niyan. Ay, wait lang. Oops. Ayan. So, sino dito yung mga estudyante ko sa FAR? Ayan. So, mga estudyante ko sa FAR na mga malulupit. Malulupit yung mga estudyante ko sa FAR eh. Mga pinanganak yan para maging financial analyst eh. Okay? So, ito yung pinagawa ko sa kanila, no? This is the financial statement of PAGCOR. Okay? Kung natatandaan nyo. So, naduling-duling yung mga yan. Naduling-duling yung mga estudyante ko na yan kakakompute, no? With the PAGCOR's financial statement. So, ganito siya no, ginagawa. So, this is an example of horizontal analysis based on the financial statement of PAGCOR. So, ganito namin ginawa yung horizontal analysis, no? So, yung amount, ito yung mga figures, then ito yung percentage ng change, no? So, meron yang explanation, no? Meron akong mga explanation na pinagawa sa kanila, but that doesn't matter at all for now because this is not the usual class. No? We will just be refreshing your knowledge para lang para lang prepared kayo kapag dumating yung time na meron kayong long examination or midterm examination. Okay? So, now this is an example of the vertical analysis. So, medyo nakakalito si vertical analysis kasi si vertical analysis dito, ang base figure namin dito is the total assets, no? So, total assets is the 100%. So, since given naman si total assets no dun sa mismo financial statement, nilagay na namin siya agad as 100%, no? So, ganyan yung itsura yan. So, wag kayong matatakot no kapag ang vertical analysis nyo ang vertical analysis nyo yung 100% ay nasa baba. That's fine, no? Maiintindihan pa rin yan. Okay? Now, after na itong vertical and horizontal analysis, we have our weeks 4 and 5, no? Which is the financial analysis. So this is the last topic that we will be discussing for tonight. Kasi nga, I do have meeting. So kailangan kong habulin yan. Pero I'll try my best na ma-explain siya on the simplest possible way. No? So the discussion flow would be this, no? Your financial statement analysis, financial ratios, the Dupont analysis, measures of return, cost volume profit analysis, break-even point analysis, and your variance analysis. Okay, so financial statement analysis. So the financial statement analysis is the process of analyzing a company's financial statements for decision-making purposes. So kagaya nga ng sinabi natin, kagaya nga ng napag-aralan natin before, we do have three main financial statements, no? We have your balance sheet or your statement of financial position. We have your income statement, which is your statement of comprehensive income, and we have your cash flow statement. No? Now, we do have internal and external purpose of financial statement analysis. So, tinatanong ko rin to sa mga estudyante ko. So, what do you think is the internal purpose of financial statement analysis? No? So, yung purpose ng internal financial statement analysis is for the managers, no? Example lang, no, for the managers, the financial statements offer all the information necessary to plan and evaluate, and control operations, no. With regards naman to the external purpose of financial statement analysis, no, this is more on the perspective of the investors and creditors, no. The use of financial statements to gauge the future profitability and liquidity of the company. So we don't want naman to invest on a company na hindi profitable and hindi liquid, no. So those were the two. Now, we have financial ratio. So my students, kung familiar kayo dito sa slides na to, yeah, this is the same slide that I use, no, during our classes. No, so that's why meron akong mga ganito, but that should be fine. So financial ratios are mathematical comparisons of financial statement accounts or categories, no. So this relationship between the financial statement accounts help investors, creditors, and internal company management understand how well a business is performing and of areas needing improvement. Now, wag na natin tong puntahan kasi this is just an EPAL question to my students, no, just to hype them up. Okay, so we do have different categories of financial ratios. We do have liquidity ratios, we have the solvency ratio, we have asset utilization ratio, we also have profitability ratio and your market ratio. Now, so liquidity ratio, no? So liquidity ratios are the ratios that measure the ability of a company to meet its short-term debt obligations. So these ratios measure the ability of a company to pay off its short-term liabilities when they fall due. So basically, it is just a type of financial ratio, no, used to determine a company's ability to pay its short-term debt obligations, no? So there are several liquidity ratios, but these three are the most common. No, we have the current ratio, acid test ratio, and your cash ratio. So the current ratio mo is current liabilities, no, is being computed by dividing current liabilities by your current assets by current assets by current liabilities. So anong ini-imply ba ng ng current ratio? So current ratio means kina-calculate natin if the company is liquid enough, no, if the company has enough current assets to cover up their current liabilities. No? So si acid test ratio, this is a stringent version of current ratio, no? We have removed inventory, no, from the current ratio. That's why we arrive at acid test ratio and left the quick assets. So we have the cash plus your accounts receivable plus marketable securities over your current liabilities. And the most stringent of them is your cash ratio. So nagbabago-bago kasi yung formula ng cash ratio, iba-iba yung approach dito. But the most common formula is cash and cash equivalents over your current liabilities. This test, no, if the company has enough has enough cash and cash equivalents to cover up the company's current liabilities. No? Now, syempre kailangan ko kayong no, sampulan. Okay? Wait lang. Wait lang Oops, wait lang. Wait. Saglit lang. Wait lang. Ayan. So, can you based on this figure, guys, can you compute for the current ratio? Let's see. Tingnan natin kung let's just test, no, kung paano nyo kina-calculate si current ratio. So current ratio is computed by dividing your current assets by your current liabilities. Now let's find out, no, what is the current ratio of the company given these figures. Just type your answers, guys. Makikita ko naman yung dito na pag nag-type.
Yes po, sir.
Okay. Ayan, dito. Ay, open ko camera ko. Sorry. Ayan. Nakikita nyo na ako. Pasensya na sa damit kong color pink. No? Feeling ko kasi summer na. Tsaka ang init, kaya maluwag. Alright. So, yung mga estudyante ko, nire-require ko sila na lalagyan yung sagot nila lagi ng na lagyan nila ng letter X lagi yung sagot nila no whenever I ask them to compute for the liquidity ratio. So the current ratio is 1.6 times. No? So ibig sabihin, no? Ano ibig sabihin ng 1.6 times na to? Ibig sabihin, the company has um can pay off can pay off their current liabilities 1.6 times, no? Now we have decision criteria here, no? The decision criteria here is if your current ratio is greater than 1, no? Ibig sabihin, the company has more than enough current assets to pay off the company's current liabilities. Tama? if the company, no, if your current ratio is equal to 1, then the company has just enough current assets, no, to pay off their current liabilities. And if it's below 1, then the company doesn't have enough current assets to cover up the company's current liabilities. And if it's less than 1, the company doesn't have enough current assets to cover up the company's current liabilities. And if it's less than 1, the company doesn't have enough assets to cover up, no? So basically, pwede rin natin siya ma-compute by deducting inventories from the total current assets over current liabilities. Okay, guys, go. Compute for the quick ratio, for the acid test ratio. Go, guys. I want you to compute for the quick ratio. All right. So your acid test ratio is 1.13 times. Okay? So ibig sabihin, the company, no, has more than enough quick assets to cover up the company's current liabilities. Same decision criteria with your current ratio, no? So acid test ratio, if your acid test ratio is greater than 1, the company has more than enough quick assets to cover up the company's current liability. If it's equal to 1, then the company has just enough quick assets to cover up the company's current liabilities. And if it's less than 1, the company doesn't have enough quick assets to cover up the company's current liabilities. Now, for the last one, guys, I want you to compute for the cash ratio. Go. Ayan, makakita ko ng mga familiar names dito. We have Miss Manlulu, Mr. Samson, ayan mga estudyante ko yan, Mr. Flores, Mr. Serdoncillo, Miss Iglesias, ayan mga estudyante ko yan. Okay, so the cash ratio for this particular problem is 0.79x. Now, 0.79 times. No? So, same decision criteria, no, with the previous ratios. Okay. So if your cash ratio is greater than 1, then the company does have enough cash and cash equivalents, no, to cover up the company's current liabilities. And if it's less than 1, the company has just enough cash and cash equivalents to cover up the company's current liability. And if it's less than 1, which is this, no, this is an example, the company doesn't have enough cash and cash equivalents, no, to cover up the company's current liabilities. Okay, malinaw ba? Malinaw po ba? Alright, malinaw naman, no? Okay. Now, let's go with the solvency ratios, no? So, solvency ratios, um, solvency ratios are the ratios that are calculated to judge the financial position of the organization from a long-term solvency point of view. So these ratios measure the firm's ability to satisfy its long-term obligations and are closely tracked by investors to understand and appreciate the ability of the business to meet its long-term liabilities and help them in decision making for long-term investment of their funds in the business. Okay. Now, these are the most common solvency ratio. No, we have debt ratio, debt to equity ratio, and your interest coverage ratio. So interest coverage ratio is the same as your time interest earned ratio. Okay, so now debt ratio, ano ibig sabihin ng debt ratio? The formula muna tayo, no? So formula ng debt ratio is total liabilities over your total assets. So, ano ibig sabihin nito? So, ang ibig sabihin ng ratio, debt ratio, we are calculating, if what is the what is the percentage of liabilities being used, no? What is the this is the same as your leverage, no? Parang we are checking how much is the percentage of liabilities no contributed in your business. And debt to equity ratio naman, it is calculated by dividing your total liabilities over your total equity. Interest coverage ratio naman or your times interest earned ratio is being calculated by dividing EBITDA. So EBITDA, also known as your operating income, dividing by your interest expense. So this means we are checking if the company does have enough operating income to cover up the company's interest expenses. Okay? Now guys, I want you to compute for the ano na lang ang compute natin dito is yung etong dalawa na lang, no? Debt to equity ratio and your interest coverage ratio. So I want you guys to compute for the debt to equity ratio. So the debt to equity ratio formula again is your total liabilities over your total equity. By the way, guys, DE ratio, no? So yung debt to equity ratio is being represented by a percentage. No? Okay, so your debt to equity ratio is calculated at 87%. So ano meaning ng DE ratio na to, no? So guys, by the way, the higher the DE ratio, no, it means that the company is associated with high risk then, no? Ibig sabihin kasi, no, your company uses more money from the creditors rather than using the company's equity, no? Okay, so this one is I cannot say that this is an ideal percentage, no? But by just seeing this that your equity is greater than your total liabilities, I can say that this DE ratio is still is still acceptable, no? But ano nga yung sinabi natin, no? For most companies, the DE ratio is, the ideal DE ratio is 1.5. Okay, and for large companies, no, so the DE ratio is the ideal is 2, no? So very risky yung mga ganong klaseng figures. But that's the ideal figures, no? So next, guys, I want you to compute for the interest coverage ratios or your time interest earned ratio. By the way, no, yung times interest earned ratio, no, this is represented as well by X, no? Same with your liquidity ratios, no? Nire-represent to ng X. So ganito yung ginagawa namin, no, sa klase namin, no, from kapag nagkaklase kami sa financial analysis and reporting. Para dun sa mga estudyante na hindi ko hawak, ganito kami magklase, no, sa financial analysis and reporting. So from time to time, meron kami mga sample problems para din ma-exercise, no. Okay. So your interest coverage ratio or your time interest earned ratio is 5.27 times. It means that for every no for every one peso interest, the company meron silang nakaalat na 5.27, no? They can pay it 5.27 times. Okay? So the higher your interest coverage ratio, ibig sabihin the better, no? Maganda siya for the company because the company can pay off their interest expenses, no, using the company's operating income. Okay? Now, next, we have your asset utilization ratio. So, maraming tawag dito, no? Maraming tawag sa asset utilization ratio. Meron din tawag activity ratio, meron din tawag efficiency ratio. So asset utilization ratios are used, no, to measure how well a company is utilizing its assets and resources. So sabi dito, activity ratios measures how efficiently the company manages its assets, kagaya ng sinabi ko, and activity ratios help answer these questions, no? So we have several formulas here, no? So the first one is your accounts receivable turnover, no? Accounts receivable turnover is being calculated by dividing your net credit sales, no? Net credit sales over your average accounts receivable. So paano natin kino-compute si average accounts receivable again? We add beginning accounts receivable balance and your ending accounts receivable balance and dividing it by 2, no? We add the beginning and the ending balances and dividing it by 2. So accounts receivable turnover, no? Ano ibig sabihin nito? The higher the accounts receivable turnover, the good, no? Pero meron yang counterpart, no? Kailangan nating computein si average collection period, no? So by the way, guys, your ay accounts receivable turnover, ang nire-represent nito is kung gaano kabilis makolekta ni company, no? Na kung gaano kabilis makolekta yung yung sales ni o yung net credit sales ni company, no? Yung accounts receivable ni company, no? So, meron tayong tinatawag na average collection period, no? So, average collection period is being calculated by dividing 365 days to your accounts receivable turnover. So, whenever we calculate, no, accounts average collection period, kapag na-compute na natin si average collection period, hindi natin agad masasabi na maganda yung na-compute nating days, no? Yung number of days na na-compute natin. No? Saan nga, laging ang sagot namin dyan sa klase is, it depends. No? It depends on what? Okay? It depends on what again, class? Kung sino nakakatanda, saan nakadepende si average collection period kung maganda ba yung na-compute natin or kung good ba yung na-compute natin or bad. Saan siya nakadepende? It depends on the very good. So natatandaan pa nila. So it depends on the credit terms, no? So if you have calculated 59 days, no, with your accounts receivable yung average collection period mo, and your credit term is 60 days, no? Then that's a good sign, no? Ibig sabihin, you were able to collect your accounts receivable prior, no, dun sa before matapos yung credit term, which is in 60 days. But if you were able to calculate your average collection period, no, beyond 60 days, there will be a problem na. Okay? So it depends on the credit terms, no? Same goes with your accounts payable turnover, no? Dito naman sa accounts payable turnover, chine-check natin kung gaano kabilis nababayaran ni company yung utang niya. Okay, yung accounts payable niya, no? So, accounts payable turnover is being calculated by dividing your net credit purchases over your average accounts payable. So, average accounts payable again, guys, paano natin siya i-compute? Average accounts payable is your beginning and ending balance of accounts payable dividing it by 2. Okay, so the higher your accounts payable turnover, the good. No? Okay, so tingnan natin dito no kung para makita natin no, kung maganda ba talaga yung accounts payable turnover na na-compute natin, we also need to check the average payment period. No? Your average payment period is 300 is being computed by dividing 365 days over your accounts payable turnover. Now, same goes with the accounts receivable turnover or your average collection period. It depends on the credit terms. No? If your average payment period is being computed lower than your credit term, no, yung kung ano na pagkasunduan nyo, then that's good. It means that the company was able to pay off its obligation, no, before pa matapos yung credit term. But if it's beyond, no, dun sa credit term, there will be a problem with that. Okay? Next is your inventory turnover. So your inventory turnover mo, it is being calculated now by dividing your cost of goods sold over your average inventory. So average inventory is being calculated by now by adding your beginning and ending balance of inventory then dividing it by 2. So ibig sabihin naman dito kay inventory turnover kung gaano kabilis, no? Mag-replenish ng inventory si business. Okay? So we also need to calculate for the average age of the inventory. How? So it's 365 divided by your inventory turnover. Now, we say that whenever we calculate the average and age of inventory, we can already say that the company's AAI is good? No, it always depends. And the answer is always, it depends, no? It depends on what? Kung natatandaan ng mga students ko, it depends on what? Very good, no? It depends on the kind of product, no? If you were able to calculate, for example, a 50-day average age of inventory, no? Tapos ang product mo ay perishable good. So bulok na, no? Hindi mo pa na hindi mo pa na dispose yung inventory mo. So it always depends on the product, no? Next, we have your total asset turnover, no? This is your net sales over your average total assets, no? The higher the total assets turnover, the good, no? Ibig sabihin the company is efficiently using their assets, no, to generate the to generate high sales. Okay? Nakakasunod? Okay, I still have few more minutes now. Okay. So next we have your profitability ratios, no? So profitability ratios, sabi dito, can be used to assess a company's ability to control expenses and to convert sales into profits. So in addition, profitability ratios help determine how effectively the company produces profits from its resources. So basically, so these are just a set of measurements used to determine the ability of a business to create earnings. So the first one is your gross profit margin. No? So gross profit margin is being calculated by dividing your gross profit over your net sales. So tinitignan natin dito, what is the percentage of gross profit against your net sales? Okay? We also have your operating profit margin. So si operating profit margin naman is being calculated by dividing your operating profit, or it can also be your EBIT, no, EBITDA. Kung nakakakita kayo ng formula na ganun, it's just the same divided by your net sales. Okay. So the higher, by the way, the higher the gross profit margin, the better, no? Same goes with your OPM. So kapag mataas si OPM mo, the better. Okay? Same with your net profit margin, no? So net profit margin is being calculated by dividing your net profit over your net sales. So sabi natin, kapag mas mataas si net profit margin, mas maganda. Okay? So with this guys, so at least 7%, no? So kapag titingin kayo ng company, no? If you are on the perspective of an investor, so kapag titingin kayo ng company, look for the company with at least 7%, no? 7% net profit margin with no more than 2 years of declining earnings of 5%. Okay? Next, we have your EPS, so your earnings per share. So your earnings per share is being calculated by your subtracting preferred dividends, no, from the net income, because unang binabayaran yung mga preferred shareholders, no? Okay? So dividing by the common shares outstanding. Okay? Uh, hmm. Next, we have your return on assets. So, sabi natin, ano ang other term natin for return on assets? We can call return on assets as your, we can also call your return on assets as your, ano sabi natin? Very good. We can call it as your, we can also call it as your ROI, no? Or your return on investment. So, titignan natin dito, kung gaano ka kung gaano, no, kung gaano ka efficiently na use yung assets for the company to obtain a high net income. Okay? We also have your return on equity, no? Your return on equity is your net income over your total stockholders equity. Okay? Next, we have your market ratio, no? So your market ratios relate the firm's market value, no, as measured by its current share price to certain accounting values. So these ratios give insight into how investors in the marketplace feel the firm is doing in terms of risk and return. So we have here, no, the first one is market to book ratio, no? So market to book ratio is being calculated, no, by dividing your market price, no, kung paano binebenta at saka ano, no, binebenta or binibili, no? Okay, over your book value per share. Pero kailangan muna natin computein si book value per share. How? So book value per share is being calculated by subtracting your preferred equity to the shareholders' equity and dividing it all by your average common shares outstanding. Okay? Next, we have your PE ratio, no? Your PE ratio is being computed by dividing your market price over your EPS. Okay, so paano nga natin ulit kinocompute si EPS? Si EPS is being computed by subtracting your preferred dividends to the net income divided by your common shares outstanding. Okay? Next, we have your dividend yield. So dividend yield is being calculated now by dividing your dividend per share over your beginning stock price. Okay? Now guys, after ng financial ratios, we will now be moving to the Dupont analysis. So the Dupont analysis formula is an alternate way to calculate and deconstruct your ROE, which is your return on equities, and in order to get a better understanding of the underlying factors behind the company's ROE. So there are three determinants, no? There are three determinants in the Dupont equation. Now, the first one is your net profit margin, which calculates the operating efficiency of the company. Also, we have your total asset turnover, which tells you the asset efficiency of the company, and we have your financial leverage, which is which is your equity multiplier. So this is the Dupont equation, no? So the Dupont equation, so the simplest Dupont formula, the three-step method is done by simply just multiplying these three determinants, no? But we need to see a bigger picture on this one, no? We can see a bigger picture on this one. So this is the three-way Dupont analysis, no? So may kwento yan, no? Sinasabi ko sa mga estudyante ko, may kwento yan kung bakit nagkaroon ng three-way Dupont analysis. Hindi lang siya ginawa, no? Kasi trip-trip ng mga financial analyst. Okay? So, ulit, sige, natin to, i-deconstruct natin. Sige. Yan. Nakikita po ba yung screen ko? Nakikita po?
Yes.
Sorry na. Nakikita yung Word document? Yes po.
Yes po, sir.
Okay po. So, si ROE, no? So, sorry. So, si ROE, ang initial formula ni ROE, no, is your net income over your total shareholders equity, no? Okay. Tama? Okay, so sabi ng Dupont Corporation, nakita kasi nila na yung ROE nila sa mataas, pero upon checking the financial statements, may mga fluctuations, no? May mga fluctuations sa loob ng financial statements. That's why nag-isip sila ng way kung paano makukuha, no, yung mga wait lang. Ito ang para makita nila yung dito, yung mga loopholes, no? So they arrive by multiplying this initial formula of ROE by, saan minultiply to ulit? Natatanda ng mga students ko. Saan nila minultiply to ulit? They multiply this to, very good. So minultiply nila to sa revenue, So sabihin natin total sales na lang, no, para hindi malito. Okay? So yan yung first. So anong nangyari? So nag-cross multiply, parang ang nangyari diyan is parang na multiply si no? Parang nag-exchange. So ang nangyari dito is your net income over your total sales. And this is your total shareholders and the total sales to. Ito si total sales, dito si total shareholders equity. Okay. Okay. Susundan. Okay. So next, ang ginawa nila ulit, after niyan, no? Minultiply pa ulit nila yan sa isa pa. No? Minultiply nila yan. Saan naman ulit nila minultiply yan? Minultiply nila yan saan nila minultiply yan? Total assets. Very good. Okay. So, nung minultiply nila sa total assets yan, dyan na nag-arrive, no? Dyan na nag-arrive yung ano, dyan na nakuha. Dyan na nila kuha. Si wait lang. Sige. So, hindi po ba makita? Sorry, hindi po ba malabo po ba? Ayan po.
Okay lang po, sir. Thank you po.
Okay na po. So, dyan na buo, no? Dyan na buo si ROE. Ayan yung ano, yan yung nangyari kung paano nabuo si three-way Dupont analysis. Okay, wait lang. Lang. Okay. Wait lang. Yan. Sinend ko siya dun sa mga sa mga council, no, sa CAF council para meron kayong copy. Okay. Okay, next. So ganun no, so ganun nangyari no. So dito, kino-compute natin ulit for yung no, yung operating efficiency, kasi total asset turnover yung asset efficiency. And this is your financial leverage, no? Okay, by the way, by this two, no? By multiplying this two, no? Maka-cancel natin si sales diyan. This is the same as your, no, return on asset or your return on investment, or you can say it as sorry, yun nga, return on investment or return on assets. Okay? Now, we also have your five-way Dupont analysis. No? Ang nangyari naman dito is yung tax rate, no? So yung tax, no? So yung tax, tinanggal nila dun sa sa net income, kaya nag-arrive tayo ulit dun sa no, sa operating profit margin, no? Which is your EBIT over sales. So minultiply natin yung sales over total assets, which is the same as your asset turnover less your interest expense ratio, no? Interest expense ratio, your interest expense over your total assets. Tapos yung ayan, open and close parenthesis, multiply by your equity multiplier times, no? 1 minus your tax rates, no? This is what we call your tax retention rate, no? Yung 1 minus tax rates. We call it in our company, we call it as your tax retention rate. Okay? Now, we do have different measures of return, no? We have your holding period return, that is your arithmetic or mean return, geometric mean return, and we also have your internal rate of return, annualized return, portfolio return, and other major returns. Okay? Sorry guys, I'm running out of time talaga kasi late na ako sa meeting. I just mentioned to my boss that I am still in the review session, no? Okay. So dahil mahal ko ang sambayan ng financial management. Let's move on with this one. So holding period return. So holding period return is a return earned from holding an asset for a specified period of time. So the time period may be as short as a day or many as years, or as many as years now. So and this expresses a total return. So this means we look at the return as a composite of the price appreciation and the income stream. Okay, so this is the formula of holding period return. If you want, guys, I will be providing you this PowerPoint presentation for you to have a copy of this one. No? Okay. Next, we have your arithmetic or mean return. Okay? So when we have assets na for multiple holding periods, it is necessary to aggregate the returns into one overall return. No? So an arithmetic mean is a simple process of finding the average of the holding period return. So for example, the example natin, no? So we have 15, 10, 12, 3% over the last 4 years. No? So by adding this percentage of returns, no, and dividing them by 4, we obtain 10%. No, so if your base year you obtain 15%, no, 15% return versus your arithmetic mean of 10%, this means that the company exceeded, no, the average over the last 4 years, which means that the company is performing well. But if your base year is your 3%, no, if this is your 3%, so the company might the company was able to obtain 3% return. However, no, however the it is below, no, it is below on what you have computed using your arithmetic mean return. Okay. We also have your geometric mean return. So computing a geometric mean follows a principle similar to the computation of compound interest. So the previous year's returns are compounded to the beginning value of the investment at the start of the new period in order to earn returns on your return. So a geometric return provides a more accurate representation of the portfolio value growth than arithmetic return. So using the same annual returns, we compute the geometric mean as follows. So it's the formula is just 1 plus I, no, times yung 1 plus I for the succeeding year ulit. Then multiplying this 4, no, and the exponent will be your 1 over n. Yung n is yung number of annual returns, no? Or your number of series. Okay, so we have your 4. We have 4 here. Tapos, minus 1 to get the percentage, no? To get your geometric mean. So, geometric mean is more conservative than your arithmetic mean because it is always lower, no? Than the hindi naman siya sobrang baba, but it is slightly lower than your arithmetic mean. Okay. Internal rate of return. I did not prepare for the interpolation, no? There is an interpolation computation or interpolation process of computing the IRR. No, so I encourage you guys to PM me. Nagre-reply ako kapag chinat nyo ako. So I encourage you guys to send me a message directly on Messenger so that I can explain this to you because I'm really running out of time at the moment. So I'm trying to concise everything. No? So we also have your annualized return here. So if the period during which the return is earned, no, is not exactly 1 year, we can annualize the return to enable an easy comparative return. So to annualize a return earned for a period shorter than 1 year, so the return must be compounded by the number of periods in the year. So a monthly return must be compounded 12 times, a weekly return 52 times, and a daily return 365 times. So sa class ko kasi in-introduce ko sa kanila yung word na fortnightly or bi-weekly. So kapag bi-weekly or fortnightly, you use 26 times, no? So basically, the formula for the annualized return is 1 plus I raised to the F, no? Yung F which is your frequency. Okay, minus 1 to get your annualized return. Okay? No, for annualized return, we also have no kapag ano naman, no? Kapag yung holding period mo is longer than 1 year. No, kapag longer kasi for 1 year, if you want to annualize it, if this is a monthly basis, no, if this is monthly, so your numerator will be 12, no. If this is daily, then your numerator will be 365. Pag daily, no, 365. If it's weekly, the numerator will be 52. Okay, over doon sa yung sa holding period, no, yung months, days, or yung weeks of holding period that is more than a year. Okay, so basically it's 1 plus I raised to F over your holding period, no? Holding period in months, days, or in weeks minus 1 to get the annualized return. Okay? Now we also have your portfolio return. So when a portfolio is made up of several assets, we may want to find the aggregate return of the portfolio as a whole. No? So in order to compute this, we weight the returns of the underlying assets by the amounts allocated to them. So your portfolio return can be calculated as a figure or as a percentage, no? So a portfolio that consists of 70% equities with return of 10%. So kapag ganito yung given, so basically you will be able to calculate a percentage na portfolio return. But if sometimes kasi given dito like figure of equities with a percentage of return like this. Okay, so you need to multiply the percentage of return on that particular asset, no, to obtain your return. So example dito is 70% of equities which has a return of 10%, 20% of bonds which has a return of 4%, and 10% of cash which has a return of 1%. So in order to get no the aggregate portfolio return, you just add, no? You just add everything. After you multiply the percentage of return to the asset, you add everything to obtain your aggregate portfolio return. Okay? Wag na natin muna itong i-discuss. Okay, let's just drop this one. Let's proceed with CVP analysis, no? CVP or cost volume profit analysis. Okay, so CVP analysis or cost volume profit analysis are most commonly referred to as your break-even analysis. Is a way for companies to determine how changes in cost, both in variable and fixed, and sales volume affect a company's profit. So with this information, companies can better understand overall performance by looking at how many units must be sold to break even or to reach a certain profit threshold or the margin of safety. So we call this as your para sa mga hindi pa nadaanan si CVP sa class ko, we call this as your contribution margin income statement. So this is the format of the contribution margin income statement. No, it is your sales less your variable cost to obtain your contribution margin less fixed cost to get your net income. Okay, so there are several components of the CVP analysis. No, so we have your CM ratio or your contribution margin ratio and your variable expense ratio. We have your break-even point in units or in currency. We also have your margin of safety. And we also have your changes in net income and the degree of operating leverage. Okay? So, ito yung sinasabi ko nga kanina, yung contribution margin income statement. Let's just snip this out kasi yung mga succeeding given, no, naka-base dito. Okay? Yung mga succeeding examples. Okay, so your the first one is your CM ratio, no, and your variable expense ratio. Okay, so CM ratio and variable expense ratios are numbers that the company generally wants to see, no, to get an idea of how significant variable costs are. Okay, so your contribution ratio is being calculated by dividing your contribution margin by your total sales. And your variable expense ratio naman is being calculated by dividing your total variable cost by sales. So sabi dito, a high contribution margin ratio and a low variable expense ratio indicate low levels of variable cost incurred. So based on this given, guys, can you compute for the contribution margin ratio? Okay, compute for the contribution margin ratio, no? Kuha lang ako ng water, mabilis lang. Okay. Sorry na walang given. Sorry, I was on mute. So we were able to obtain a CM ratio of 0.25, no? Can you guys now compute for the variable expense ratio? So your variable expense ratio would be very good. It's 0.75. Okay. This is just a test. Okay, kung nasusundan niyo yung formula, okay? Next. You also have your break-even point, no? In units. So this is the number of products the company must sell to cover all production costs. Similarly, the break-even point in dollars or in currencies, the amount of sales the company must generate to cover all production costs, no? Your variable and fixed costs. So the formula for break-even point is your total fixed costs over your contribution margin per unit. Okay, so sabi dito, no? So the BEP in units, so the break-even point in units would be equal to 240,000. Okay, ito yon, no? Nakikita natin ito. 240,000, no? Divided by your contribution margin per unit, no? Which is yung 15, which gives you 16,000 units. So therefore, if the company sells 16,000 units, the profit will be zero and the company will break even and only cover its production costs. Okay? So ganun ko na-compute si BEP. Next, we also have your changes in net income. No, we also we can call this as your what if analysis. So it is quite common for companies to who want to estimate how their net income will change with changes in sales behaviors. For example, companies can use sales performance targets or net income targets to determine their effect on each other. So in this example, no? So in this example, if the company, no, if the company wants to earn a profit of at least $100,000, how many units must the company sell? So para makumpute natin yung number of units, we divide your we add your fixed cost to the target profit now, which is your 100,000, no, divided by your contribution margin ratio. Okay? So ano yung fixed cost natin dito? Fixed cost natin is your 240,000. Tama? 240,000 plus your target profit, no? Ano yung target profit natin? It's 100,000, no? 100,000, then we will be dividing it by your contribution margin. Or we'll be dividing it, no? By your CM ratio, no? So the company must sell at least 22,666 units. Okay. Next, we also have your margin of safety. So in addition, companies may want to calculate the margin of safety, and this is commonly referred to as the company's wiggle room. So and shows by how much sales can drop and yet still break even. So the formula of the margin of safety is margin of safety equals actual sales less your break even sales. Okay, so your actual sales in this example is 1,200. no? Minus your 16,000 multiplied by 60. Okay, paano natin nakuha si ano? Si 16,000 dito? Paano po natin nakuha si 16,000 dito? Anyone? Paano po natin nakuha si 16,000? Guys, paano natin na-compute dito si 16,000 ulit? Okay. Okay, very good. Okay, so nakalculate natin yan, no? By dividing your fixed cost over your contribution margin per units. And then we multiply this, no, by per unit of sales, which is yan 60. Then we deduct now the product to the actual sales. No, we can get $240,000 here. No, so this margin can be calculated now as a percentage in relation to the actual sales. No, so 240,000 divided by your actual sales, which is 1,200, 1,200,000. Sorry, that gives you 20%. So therefore, sales can drop by 20% and the company is still not losing any money. Okay, that's why it is called as your margin of safety. Uh, and the last part is your degree of operating leverage. No? So the degree of, finally, the degree of operating leverage or DOL can be calculated using the following formula. So the degree of operating leverage is your contribution margin over your net income. Okay, so the degree of operating leverage in this example, no? So na example natin is 300,000 over, no? Over 60,000. Okay? So, sorry. The DOL is represented just by a number, no? So, it tells the companies how net income changes in relation to changes in sales numbers. So more specifically, the number 5 means that a 1% change in sales will cause a magnified 5% in the net income. So many might think that the higher the DOL, the better for the company. However, the higher the number, the higher the risk, because a higher DOL also means that a 1% decrease, no, in sales will cause a magnified larger decrease in net income, ultimately decreasing its profitability. Kagaya nga sinasabi ko sa klase ko, we're not just talking here small figures. We're talking here, no, millions kapag nasa business tayo, nasa business perspective tayo. So we're talking about millions. Okay. I think that's the last one, no? That's the last part of my discussion na hindi ko na isasama si variance analysis. Okay? So guys, I want you to compute for this particular problem, no? I want you to compute for the contribution margin per peso yan, in peso, contribution margin in peso per unit and as a ratio, no? Contribution margin ratio. So in the month of March, no, each C salon services 551 clients at an average of 215 pesos. So during the month, fixed costs were 17,991 and variable costs were 62.50% of the sales. So I want you to determine the contribution margin in peso per unit and in the contribution margin ratio. Okay, just type your answers, guys. No? Okay, go. So paano nga ulit natin yan kino-compute, guys? Si contribution margin in yung per unit natin ng contribution margin and as a ratio. Okay, very good. So someone got the correct answer, no? So the correct answer is 37.85 for the contribution margin ratio. And the contribution margin per unit is yung 81, no? 81 pesos and 38 cents. Okay? So paano natin kinumpute yon? No? So your total sales, no, which is your 51 clients times 215, okay, which is 118,465. We multiply it, no, by 62.15%, no, to obtain your variable cost. Tama? So kapag nakuha na natin si variable cost, we need to deduct, no, the sales from it in order positive to guys in order to get the contribution margin, no, which is your 44,839. No? So para makuha natin si contribution margin per unit, dinivide natin to by 551. That's why we arrive at 81.38. Okay? So paano naman natin nakuha si contribution margin um per contribution margin ratio? Ha? Si contribution margin ratio naman natin is na-obtain siya, no? by dividing your um by dividing your contribution margin to the total sales, no? Kaya nakuha natin yung 37.85 here. Tama? Nakakasunod po ba? Okay. Next, guys. Question number 2, I want you to compute for the increase in profit. So Bromlow Company has a contribution margin ratio of 25%. So the company is considering a proposal that will increase sales by 75,000. What increase in profit can be expected assuming total fixed costs increased by 70,000 pesos? Go. Very good, no? It's 1,750 pesos. So, paano natin kinumpute yun? The increase in sales, no, guys? The increase in sales, which is your 75,000 pesos, we multiply it by the contribution margin ratio, which is your 25%, in order for us to get our contribution margin, no? So, in order for us to get the increase in profit, we need to deduct, no, the increase in fixed cost, no, from the contribution margin, no? So we deduct 17,000 from the 18,750 and we will be arriving at 1,000 pesos and 750 1,750 pesos. Na? Okay. So that's the increase in profit. And the last question would be Red Velvet Company has contribution margin ratio of 0.30. So the targeted net income is 93,204 and the targeted sales volume in peso yan in peso is 501,774. So I want you guys to compute for the total fixed cost. Uy, Chase. No. Very good. Okay, so the answer is 57,328 pesos and 20 cents. So how did we arrive at that answer? No? So okay, so your total sales, no? Your total sales is 301,774. Okay? So ang ginawa natin dyan, no? Tinimes natin yan sa point 30. So, this is your contribution margin. Tama? And we just deducted the 93,204, which is your net income, no? In order to obtain the total fixed cost. Okay? Okay. So, nasundan ba, guys, kung paano natin kinompute? Okay. So I think that's it, no? That will be the last part. Sorry, guys. I have to leave early because I have a very urgent meeting with our CEO tonight, no? So, because I will be transferring na from one company to another. So, there will be a transfer of delegations. So, kaya magkakaroon kami ng meeting with the CEO. So, if you have a message, guys, just message, if you have questions, just message me on Messenger. I'm really one chat away. Nagre-reply ako sa lahat ng nagchat-chat sa akin. Okay? Whether it's a student, no? Or a stranger, nagre-reply talaga ako. So, I'm really, accommodating with your questions.
All right. So before we end, we would like to thank you all again for coming tonight, and we hope that you learned something for today's tutorial. Again, we would like to thank Sir Arthur for being here, and on behalf of CAF Student Council, we would like to give you this certificate of appreciation. So the certificate of appreciation is awarded to Professor Arthur Vincent E. Gozum, CFMP MBA, in recognition of your valuable contribution as one of our honored facilitators in CAF Review tutorials. Given this 13th day of May in the year of our Lord 2021, it is signed by Aaron S. De Los Reyes, our Consular Head Academics Department, Professor Mark Aniceto R. Perla, CPA, our Student Council Advisor, our Mr. Aaron Paul M. Garing, our Student Council President, and our Dean of College of Accountancy and Finance, Professor Julieta G. Fonte, CPA, PhD.